Hello and welcome to the weekly roundup for the week ending Friday the 11th of December. We hope you're enjoying these reports and please don't forget to subscribe to receive regular stock market content. Also, any questions that you might have, pop them in the comments box below. We would love to hear from you. And finally, we'd invite you to follow free reports on banking stocks, tech stocks, even IPOs using the link in the descriptions below. So this week has been a really mixed week. On the one hand, we've got the optimism surrounding the COVID vaccine, which has been rolled out in the UK and is due to be approved imminently in other countries across the globe. But then on the other hand, there are near-term risks which are just dragging on sentiment, such as rising COVID cases, particularly in the US. And we've also got this slow progress towards any US fiscal stimulus, which is dragging on sentiment. And finally, there's Brexit, which is really just hanging by a thread. So as far as the indices are concerned, the S&P and the Dow, they're looking to end the week just around 0.7% lower. Here in Europe, we've got the DAX is ending, looking for a 1% loss across the week, whilst the FTSE so far is looking for a flat close across the week. Now, the reason that the FTSE is managing to outperform the DAX there is because of pound weakness. So the pound has dropped around 1.5% across the week, reflecting some Brexit nerves and uncertainty. Boris Johnson met with Ursula von der Leyen for dinner, and they failed to bridge those gaps that exist in Brexit negotiations. They still are fishing governance and also the fair playing field. So Boris Johnson's also come out today with a statement which really is sort of suggesting that a no-deal Brexit is more likely now than a Brexit deal being agreed. So that's dragging on the pound, given all those multinationals that we have in the FTSE 100. Obviously, a weaker pound is a beneficial exchange rate for them. So it's actually keeping the FTSE more buoyant compared to European peers. Sticking with currencies, the euro is actually ending the week roughly flat, consolidating above that 121 level. And we had the ECB this week expand its PEPP bond buying program by around 500 billion euros. And it's also extended the program till March 2022. Now, despite sort of easing monetary policy, the euro has actually remained pretty resilient. As far as commodities are concerned, gold is trading pretty much flat on the week. Oil, on the other hand, is looking for about 1.8% gains. We've seen Brent has crossed that $50 the barrel mark for the first time since March, and we've got sort of the oil markets focusing slightly more longer term on the future demand is set to improve with a COVID vaccine. As far as single stocks are concerned, we've had some big IPOs this week. First up was DoorDash, the US meal delivery company, and they surged on their debut on the stock market. The price was set, the IPO price was set at $102, and they actually closed yesterday at $186. So really strong demand. This is a company that's really seen strong demand for its services across the pandemic period. I think what will be interesting though is to see how this plans out. That strong demand during lockdown periods, is that expected to continue going forward? Now, if we look at the share price, then investors do seem pretty confident that it will. Another big IPO this week was Airbnb. Now, they've had a really difficult year this year with the pandemic, travel restrictions. It's not been a good year for them. They even laid off 1,900 staff back towards the start of the pandemic. Now, they did, though, do extremely well on their debut on the stock market. They were priced at $68, and they're now trading, or they closed yesterday, sorry, their first day at $144. So that actually bodes very well for travel in 2021. As far as UK stocks are concerned, there's been some volatility. Ocado, for example, they reported or gave a trading update this week. They actually slumped 7% despite some really solid figures. Now the big problem here is they spiked at an all-time high of £29.10 just at the beginning of October, but what we've seen really, they've sold off since then. They're trading around that £21 level because concerns are growing that with the vaccine, that this sort of shift to e-commerce and online shopping for Ocado will actually just ease slightly. The demand will ease as the vaccine rolls out. So that sort of explains the sell-off despite some really impressive figures. Also Rolls-Royce, now they've had a bit of a tough year as well. They're trading down 7% today as they're actually expecting, or they said, that the recovery has slowed and it's happening slower than they expected because of surging COVID cases, and seeing that return to travel has been affected. And given that they make around 50% of their revenue, or they bring in 50% of their revenue from the aviation business, the slow recovery is just weighing on demand for that stock. We hope that you've enjoyed, and as I said, please don't forget to subscribe, and any questions then do pop them in the comments box below, and have a lovely weekend.